Okay, I'm going to see how this goes. This was a request that I check this chart out and use it as a demonstration. This is not meant to give you advice to buy or sell a security. Um, you can lose everything. Please read the disclaimer. This is just for educational purposes. Hopefully, I can help you look at charts and see, develop a way of reading them yourself. I talked about it in my last videos, but I always start with one thing. I like to see where what stages we're in. I think we had a consolidation stage here, and then that was followed by a breakout right there. When that breakout occurred, very important, we had strong volume. Okay, that then started a series of events. That series of events took place in the form of higher high, lower low, higher high, lower low, and then we had a lower high followed by a higher low. Okay, so now we're inside, and then we had another, I guess you could say, like consolidation as we wound up, but then broke through. And when we did, we had another jump in volume. Okay, and that could be seen right here, and that's relative to this move. Okay, and then we continued higher quite a bit. Delete these. We continued higher quite a bit until we got to 42. Now, when we had that initial breakout, we were around $4. We got about a 10x return there. That was on Workhorse. Okay, so that's just something that's very important just to look at right off the bat. You have a price range right from here to the highs of almost 1,000%, 980%. So that's one hell of a move. And then for some reason, price came back down 81% from that mark. Okay, then it rose from 81% and it went 99%, so almost 100%. And now from that 100%, we are down almost 30%. So, all in all, what we saw was a very aggressive move up for whatever reason. Then we saw a very aggressive move down, and on that aggressive move down, you saw corresponding growth in volume. Then you saw a jump up here. Again, strong interest, but more importantly, that failed. Okay, so there's a lot of volume. If I were to zoom in, let me try that really fast. Let me just clear this out. But if I were to zoom in, I'll tell you right now. Ooh. Look at these wicks. And when I say look at these wicks, it's because when you're looking at candles, I should probably just explain as much as I can. But when you're looking at candles, this is the body of the candle right here. So on this period, this is a week. So that first week of June, this candle, we had price start right here. Price always starts when the candle opens. So on a green candle would be the bottom. Price went up to here and it closed here. Okay, so price ended the day at $13 there. That's what it's saying. But this wick, this line that goes here, that's saying that price went as far as, $17, $18 or so. I think it actually went more than that. It went to almost, it's very annoying this. I got to get used to this. But it went to 1835. And then from 1835, it came down, and it came down some 30%. So in one week, it came down 30% from the highs in that week. Okay. Then yes, we went up, but then we saw it start to come down. And when we gapped up here, and then this gap failed and closed, if you really want to be technical about it, you have three down. You have three down at this point. You got one, you got two, and then you got three. I think it's a very good time to start considering, that this is in fact a confirmed, downward trajectory. Okay, you do have some volume here, that's drying up. That could indicate that you're hitting support. But before you play that move on the bullish end, the first thing I'm going to say is, well, okay, well, where am I in relation? Oh yeah, I want to be with the larger trends. So where are they? All right, let me get rid of these. We higher highs, lower lows. This is our 30 week. This is our 40 week. And we could see that we were above those averages. All right. When we were above those averages, the 30 and 40, right here and here, we could see that those averages were sloping up. Okay. So they were coming up. At that point, we couldn't argue with that. You had higher highs, lower lows. Excuse me. That broke down. And then we entered this phase. Now, a key thing happened when we entered this phase. When we entered this phase, we crossed below the 10, we crossed below the 20, all on a 1 week move, all on large volume. And then after that, we stayed under. Okay, that's key. We are now trading under the moving averages. Even more worse is as that trading continued, the shorter term moving average here. All right, that shorter term moving average, it went ahead and it crossed under this longer term moving average. Okay, and remember the 40 week that I'm using, this thick line, okay, that's equivalent to the 200 day. All right, so this is like your 200 day moving average, and this is about your 150. All right, so on the weekly chart, you had them cross over. Now, why is that important? It's important because I'm establishing the fact that we are, in fact, in a downtrend. And the way that I know that for sure, beyond reasonable doubt, is because when I blow this up and I see that these averages crossed over, I could see this selling going on. That's right here. So these moving averages, they're going to be technical. If you're looking to short the company, that's a great time to short, because when you're traveling above the average, for instance, when you're traveling above the average, you're just bouncing off of it, right? Well, the same thing starts to happen in reverse. So if we lock in this downtrend and we go boom, 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 we go lower. Not only can we go much lower, but we will be riding under this trend. So there's two things I kind of want to see before I even feel bullish about this. Is I would want to see the shorter term average, the 30 week. I'd want to see that cross above the 40 week, and I want to see price action do the same. All right. I don't know exactly how that's going to take place, but once that started setting up, then I'd start to get interested. Then I'd start tracking this thing more often. Okay. This might sleep for a while. This might get a lot worse before it gets better. Who knows what's going to happen? But with this kind of a setup, is not even really much for me to be interested in going in. And that's just going off the weekly chart. If I'm going to pull up the daily real fast, I'm going to change my simple moving averages. I put them onto the ones that I like to use on daily and shorter, which is going to be your 10. This is going to be your 20. This is going to be your 50. And that is going to be your 200. All right. So that's just like the ones we just saw, just before. You got your 10, your 20, your 50, and your 200. Okay. So what I'm looking to do there is I'm seeing how they're trading all together, and I can see, look at that. This is the day of the breakdown. Okay. Or not the day of the breakdown. This is a daily chart, but this is that plot of the breakdown. You see right here on this gap, not only did this 10 period cross over the 20, but you came and you crossed over the 50 too, very quickly in short order. And then from that side, you just kind of consolidated. And there was a lot of volume on that move. So right there, just looking at this breakdown on the daily, I could see, okay, well, this happened with some action. And then after that period, you traded beneath the 10 and the 20, just bouncing off that 20, bouncing off that 20. Some relief happened. You broke above the 20. That's kind of what I was talking about. Okay. So if we were on a larger term time frame, I would be looking for something like this. Ooh. See, I would be looking for something like this, where you have this base here and then that. So this could end up in a cup and handle. So that is a way to look at it. But again, we want to be trading over this 200 before we're even remotely interested. And you say, oh my gosh, but price is $11. Why don't I just play the run up to 200? The whole reason being is I mean, if you're going to do that, you can do that. But the whole reason being is, if this is the potential for down, why am I going to get rid of my, why am I going to risk my money? Why not wait for a very good setup so that even if I miss, that 100% move, if it were to go above there and then break, where's the next resistance? The next resistance is 30, so I'm making 50% anyway. And we just talked about earlier, how a 50% trade is like, so hard. And let me preface that too. Let me get that straight. You're not necessarily making 50%. I'm just saying, like, sky's kind of the limit at that point, because now you're back into speculative frenzy mode. And last time we entered speculative frenzy mode on this one particular stock, which it happens in all different stocks all the time. The last time that happened, you went from $2 to 40. So depending on what the narrative is, depending on what people believe, depending on what the sentiment is, and then most importantly, what's confirmed by price action, sky's kind of the limit. So you can kind of do whatever you want. So that's that. So right now, what I'd be waiting for is I'd be waiting to see if this period of consolidation here, let's see. Ooh. I want to see if this period of consolidation that we're in, I want to see what happens with this. I want to see, do we end up like bowling out and then coming up and then coming in? Are we able to clear that line? Be able to clear that 18 area and do it well, get above this 200 day? Are we able to stay above this 50? I at least want that before I do anything. I mean, price right now is below, it's below this 50 right here. It's below the 50. So that's not too great. It's lower than this prior low. There's just, I don't know. There's no reason to enter right now. That's how I feel about that one. I'll look at, this is the website. If you want to look at the company fundamentally, Workhorse, you just hit investors for investor relations. You can check everything out there. Press releases, everything. I would highly suggest you go to SEC filings. They have everything there. Change in securities, the 10Q, the quarterly report, etc. You pick the format you want. You read it. This is TLRY. I'll jump to that. Same thing. If you go to TLRY.com, investors, okay, and then from investors you can scroll through. You can hit investment resources, governance, documents and charters, etc. You can look at everything. Okay, stock quotes, analyst coverages, press releases, events, presentations, financials, SEC filings. All right, that's where you look. Okay, so that's for TLRY. So looking at their stock chart, I'm going to go back to the weekly. I'm going to change my moving averages back. I'm going to put it to 30 and 40 period. Okay, and I'm going to try and get an idea of where we are. And I'm already kind of not liking what I see. So TLRY was apparently a lot of money, and now it is a little bit of money. But at the same time, you can respect what looks like a healthy-ish, bowling pattern here that had a break, and when that break occurred, there was large volume. But one of the biggest things that concerns me is, yeah, we had large volume, but right here, we have this wick that's just a crazy extension. I'm going to zoom in really fast, and I'm going to see just how high this wick is. Okay, so this wick measuring tool. Ooh. This range. This wick from top to bottom, 56%. So in this single week, we went 56% from the high. When that happened was also paradoxically when the volume spiked. So not really a fan of that. I think it's understandable why. Let me just quickly remove drawings. Okay, so that's understandable why. Other than that, there was some hope almost. This is what I was hoping would be a good thing on the weekly chart. Was you seemed to have been starting to develop, lower low, higher high. I mean higher low, higher high, higher low, higher high, higher low, higher high. Higher low, lower high, and then you broke that down. All right, so it was developing that trend, but now it looks like we're seeing our classic base, accumulation, distribution, sell off. Now we're at another, basing period. So what are we going to do with that basing period? So that's my real question on this one. I'm going to say, okay, well, what am I doing in my basing period? And what I'm worried about there is two things. I don't like this trend that's developing. Okay, so we went one, two. I think that looks like it's going to be one of these. Okay, which would just be a continuation of that overall trend down. So I don't like that positioning. We crossed below the 200, and then we crossed below the 40 week, and we crossed below the 30 week. So the 200 and the 150 day. I really don't like the way that looks. When we rose up and broke this moving average, we did so on lackluster volume. That being said, we do have to respect that right now the averages are sloping up. Okay. But it's my contention that with this type of price action in this channel, they could bounce sideways for a while and then just fail. Because if this moving average starts to curl up, for instance, if price drags it down, that's just going to become right in line with this, resistance area. So that's what I'm worried about, $20. So I'm not really a fan of this unless I could probably break out at $20 with some really good volume. Because at that point we're looking at the period. Then again, we're looking at this as like our channel, and we would be, let's see, 1 2 3 4 5 6 7 8 9 10 11 12 13 14. We have a 14-week base here, so if that could break up, we could be looking at challenging new highs. So I would be a buyer from there, depending on what happened here. Maybe I'd lighten my load. If it broke past, maybe I'd still buy. But there's a lot of indecision in this area. Okay, so this area has a lot of indecision, so I would say that this range could potentially have the same. So if this does break out, it could easily fail. So you would have to implement that, 7-8% loss limit on there. That would be the best way to do that. Let's look at it on the daily quickly, and then we'll end this one. So looking at TLRY. Okay, so I'm looking at one thing right away. I'm gonna say that this looks like it's a basing area. Okay, so that's the first thing. And then, no, let me fix this really fast. Okay, so that's that long day. So I'm gonna really just focus on this trend here. It looked like we could potentially be basing in this area. That still could be the case. What concerns me the most here would be exactly what I keep pointing out. Oh, you know what? Before I do that, let me change my averages. Put these back on. Okay, so this is my dailies that I like. Once again, to go over what they are, this is our 200. That's our 150. This is going to be our 20. And this light blue guy is going to be our 10. All right, so that's the averages that we got. So we saw price action trending upwards. It was right above this 10, fought the 10, came down, went up, fought the 10, broke through the 10, broke through the 20. We saw right here the 10 period crossover the 20. Then it came back up, challenged the 20, but then failed back below it. Okay, so that's just a very important thing that I think needs to be realized. We had that 10 cross below the 20. Since that point, we've been below the 20, which then crossed below that 50, and the 50 went sideways. So now you have your shorter term moving averages below the longer term moving average, or the medium term moving average, and that medium term moving average then started to trend down. And now we're having all of these converge at once. We're having a very bearish candle, and we're having volume pickup. Okay, it's not surging through the roof or anything, but it's telling me that it doesn't look too bullish. And being that when we zoom in on what's going on here, look at it more closely, we could see that this big candle, okay, this volume that occurred, this was, let's see, volume 26 million, 27 million. So these were almost 30 million. And then this was 11 million. Okay, so we almost had, 3 times the volume, like 250 or 60%. But we almost had 3 times the volume on these last 2 days. And both of these last 2 days enjoyed some premium selling. Okay, because if you look right here, we had price come up, hit the 20, fail back below the 50, fail back below the 10. Right? So there's nothing really that looks good there. It violated this previous low. So where can we go from there? I don't really know. I just know that the trend is down. So I'm not really looking to be long this stock at this point. A number of things would need to happen to make me very bullish. But I would just definitely keep this on the radar. When I see a setup like this, I just get really, really nervous. The first place I would think I would look for it to achieve higher than before I even got an interest in it. I think it would have to go above. I think it would have to go above this area. It would have to go above, you know, 2180 or so. But that's it. I wouldn't really touch it until it did that. Where can it go now? I would say the first stop would be around there. With the second stop likely in this vicinity. We could be looking at sub $10 easily. So no, I just wouldn't feel great about that. I mean, anybody who enters it, you always control your risk. You don't want, to that 8% or so. But I don't even want to give that away, because I'm going to give that away enough times when I'm like in a really good setup, because you're going to be wrong so many times. That's just the nature of it. So I really don't want to give that away super, super easy. So that's that. Really fast, just to finish this up. This picture is called digging a hole. Small losses lead to big, are easier. Small losses are easier to recover from compared with big drops. The reason we want a good setup is because if we lose 8, we can make 8.7 a little easier. But if we lose 25, we have to do 33. If we lose 30, we got to do 43. If we lose 40, we got to do 67. And if we lose 50, we got to double our money, and it only gets worse from there. So just manage your risk. Look for good setups. Trade anything and everything that you can. Thanks.